Hello everyone, it is July 6th, a Monday, and this is the Naples Money Managers with Money Matters. I'm Marcus Bickle, and this is Dennis Nelson.
Morning.
And it is another beautiful Monday. So Dennis, what do you have for us today?
Well, I was just going to talk about stocks. This has been a really interesting market, defying gravity, a lot of people say. The market continues up. I think we're up 300 or 400 points this morning after the announcements over the weekend of 10,000 people a day getting infected with the virus. So it's defying all the odds. But we have the usual suspects as being the winners in the stock market: Amazon, of course, Apple, Facebook, etc. But there's a lot of stocks that are kind of under the radar that you might not suspect as being good candidates for purchase. Take, for instance, the best performing stock, at least among major stocks, is Winnebago. Now, at first thing you say, Winnebago, I mean, that's crazy, but you think about it a little bit and maybe this makes some sense. People want to take trips, they don't want to take an airline, they want to stay outdoors in fresh open air, kind of right up Winnebago's alley.
And actually, to Dennis's point, I know people personally who own something like that, who have traveled during this time period, and it has been nice. You know, the campgrounds are clear, you know, you're not around people, things like that. See the great outdoors.
Yep. So that certainly has worked and may continue as this epidemic seems to be just continuing on and on. Another stock, Domino Pizza. Maybe kind of obvious, but you wouldn't really think that, okay, I'm going to make a lot of money at doing something like this, but there it is. A couple at-home gambling stocks. DraftKings just had an IPO, just came out, is now listed. Penn National Gaming, at-home gambling for everybody.
A stock we hold, actually.
Now, one wonders just how much gambling is going on since all the sports are shut down, but nonetheless, the stocks have been doing well and seem to have a following.
And to that sports point, I think you can see a lot of the leagues are really actively trying to come to grips with this so that they can reopen in a way that is both safe and still providing the entertainment that everybody wants. So I don't think it'll be too long before we see some of those sports venues reopen. Maybe not with people.
No, I think that's right.
Yeah.
I think that's right. Hopefully sooner the better, because I miss it.
Yeah, oh, absolutely. And I saw, incidentally, one, there was, I think it was a baseball game in Japan, and they filled the stands with stuffed animals to give the perception of a crowd. But they still played the game.
That's fun. Well, I watched a little bit of golf Sunday afternoon, and it was spooky with no crowds and no cheering when there was a great shot. And you know, that's got to affect the game. It's got to affect the players as well as the audience, the enthusiasm of people watching.
Yeah, the world that was.
Yes, indeed. Another stock that might end up doing well in this. There's been some speculation about Macy's. And that Macy's might be a good target for pickup by Amazon. I hate to spread rumors and or idle talk, but there's some things that make sense here. Amazon, that seems to be everywhere, really owns only a little over 5% of the total retail market. 5%. Who would think that? You would think that they're, as they say, they seem to be everywhere, but still 80% of all retail sales is still done in the big box stores. And there's some other aspects that make Macy's look like a reasonable target for someone to take over, and Amazon is a likely taker over candidate. A loser, McDonald's. Apparently people out of work and working from home aren't going to breakfast at McDonald's anymore. And McDonald's breakfast is their most profitable line.
It's interesting. I didn't know that, actually. So they're under pressure.
I didn't. You just don't suspect these nuances that is all being caused by the COVID virus. So with that, I will step out and let John step in.
Thank you very much, Dennis. That was really interesting. Mr. Kincaid. All right. Welcome.
So, yeah, good to be here. A lot going on, but you know, we've been through times like this before. If you isolate the market and you look at history of the last 100 years, we've definitely been through like events, wars, etc. One thing that I really believe that attracts people to the Naples Money Managers, and is really what I feel is my mission to the public, is different ways to try to mitigate risk. And it's not totally a science, though people have tried to make it that way with modern portfolio theory, etc. It has some merit, but I want to differentiate between three different ways to do that. You know, asset allocation. Through the 70s, 80s, and 90s, we talked a lot about stocks, bonds, and cash. And if you somehow dial those into three different groups at different percentages, maybe you got some risk reduction. And that's a big maybe, depending on what goes on. So that's asset allocation, using an asset class, stocks, bonds, or cash, to try to put a defense up for risk. Does it work all the time? Absolutely not.
And even in the recent instability, a strategy like that would have gone down. Like
Absolutely.
30 or 40% that we saw the market fall.
Absolutely, and that's a good point. So asset allocation, which does give us some intel, if you will, in investing, it's not the answer to everything, but it has been a lot of the retail broker dealers in the world talk about that initially as their total defense. We've always talked about diversification. That's more of just a simple principle in investing. You never want to put all your eggs in one basket, I guess. But diversification doesn't reduce risk necessarily. In fact, it could reduce return depending on how you diversify. Spending a lot of years at a retail firm, we use these because that's basically all we had to use to try to show a prospective client that we could actually reduce risk. And like Marcus said, markets come around and we simply don't get what we want. So there's a third way to mitigate or to slow down or to reduce risk, and it's an overlay. First of all, we happen to use an option overlay, and many people miss the point with options, and they don't understand what options can do in a conservative way. A strategy with options, an option overlay, is it can help here, it can definitely help here, but it produces specific results. So if I go and buy 50 different stocks and I diversify, that doesn't I don't know exactly what I'm going to get. It's kind of like, I hope the markets go up over time and the diversification.
Buy and hope.
Buy and hope, that's it. So at the Naples Money Managers, and what really drives me about our strategy is we have an option overlay. Now, these are not speculative options. These are options that cause or govern specific results.
Sure.
It's not that we hope that Coca-Cola we buy that it goes up, but we actually buy, if we were to buy Coca-Cola, we would buy it, and then with our portfolio of 25 to 30 stocks, we take this overlay and we put it over those common stocks, and that causes, by its structure, it causes results to come out of this strategy versus more of a hope that the asset allocation is right.
So just to reiterate, we can have both an asset allocation, diversification, and here at the Naples Money Managers, an option overlay on top of all of that.
Right, that's exactly right. When you add this option overlay, covered call writing, you actually reduce the risk of your stock positions, as you know, right?
By as much as 50%.
It can, and that's the important piece here. So the invitation to everyone is to allow a little bit more education that asset allocation is fine. It's not the end all. Diversification is crucial. We don't want to be in one stock or one industry type or sector. But this is the only way to demand from the common stocks that we own certain results. It's the only way to do that, and it's done because there are certain numeric edges or parameters that we put into this that cause these to work, that cause this option overlay to help the common stocks work much more efficiently.
Fantastic.
And the results are literally reduced risk and much more income along with the dividends that already exist.
Fantastic. Well, thank you, Mr. Kincaid.
Absolutely.
Well, this has been the Naples Money Managers. Money matters, but remember, most of all, you matter. Have a wonderful day, and we'll see you next week. Thank you.